Hello traders, it's Samurai Trader here. Welcome to session 111. In today's session I'm going to be going through 4 live trades I took on the 6J, which is a currency futures market, and I'll show you a recording. Once again, I was live trading. I thought, I should just record this. So I'd already fired off one trade. There's no sound to it, but I'll give you commentary when we get to it so you can actually watch how I place my trades. But most importantly, I want to then explain exactly what I'm doing so you get to understand the type of setups that I'm looking for. I'm actually very excited about this market, particularly for you, the trader. I have got so many new traders that join me and they're still working jobs, and we all know what the word acronym is: jobs, just over broke, or should I say job. So therefore they're looking for a market when they get home from work they can start trading. The great thing about the yen, about the currency futures yen, particularly over Forex, is that come around 7 p.m. Eastern Standard Time, it really picks up. You start to get some really good volume, and I'll show you a couple of things on that in a moment. Now the yen is $6.25 per tick. It's actually a contract that's put out by the CME. Very easy to learn. It just trends beautifully. I'm just looking at it right now. It just trends beautifully. Even more important, not only does it trend, but there's just a ton of buyers and sellers, which makes it great for trading basically nearly 23 hours a day. Now in the New York afternoon it gets very quiet. Of course, it's the middle of the night over in Japan. However, come 7 p.m. when the market opens, actually it opens up in Tokyo at 8 p.m. at the moment, just subject to, these are subject to daylight saving hours, but as of the time I'm recording this, 8 p.m. the market opens. Okay, so we really start to see the volume kick in, and it just trends beautifully. Now the other option, if you like to trade after hours and futures, is that you could trade the Nikkei. Now the CME does put out a contract for the Nikkei. However, it's not a direct contract with the exchange in Osaka. Okay, so that means the volume is quite low. But the yen I'm very excited for traders, because as I'm going to show you, got great volume, it trends beautifully, easy to learn how to trade, $6.25 a tick, and so there's a whole range of benefits to it. So let's get into this. Now here, as most of you are aware, if you're subscribed to my channel, I have what I call target $1,000 a day. I believe in what I call power of putting in and out. That is, I want to get in, get out, get paid, and finish for the day. Now for the young guns watching this, $1,000 a day probably is not enough for you. You want to earn more, so that's where you might put in more time. I want to wrap my trading up within two hours. Usually I've wrapped things up within typically 15 minutes to 1 hour, and that's it. Today's session I think was about an hour. You'll get to see that in a moment. So if 1,000 a day is not enough, you increase the number of contracts that you're actually trading. But I'm getting ahead of myself a little bit here. Now this session will probably go for 30 minutes. Stick around, because even if you're an experienced trader, I'm going to give you some ideas, I promise, that have the potential of trading or changing, let me say that right, your trading career. So let's get into this. Now first of all, there is a risk in trading. Don't trade with money that you can't afford to lose. And of course, please feel free to pause the recording to read the disclaimer in full. If you haven't already, just a very quick advertisement. I'll turn my air conditioner off here. Click on the description link below and you can download my ebook, and you'll also see links below for the Excel spreadsheet, and you'll get to see that in a moment, the calculations that I use on the true potential, and I'm talking about sensible potential in what you can really earn as a scalper and as a day trader. So make sure you subscribe to my channel if you haven't already. Even better still, become a member. This is where the ad is, and 30 seconds it'll be over. For $197 you can join my community. You get all of my indicators you're about to see. There's over 200 hours of training. There's 36 PowerPoints. Look, my members area is literally a gold mine. I don't even bother putting up that testimonial, see, because you've just got to see what I'm about to show you. You'll get it. And so for $197 you get the works lifetime access. I also have a bonus going where for within the $197 you also get 8 live coaching sessions. That is, I run private group coaching. I also run a live trading room as well. That's besides that, but I run live coaching sessions every Tuesday and Wednesday evening, 6 p.m. to 8 p.m. where you get to log in, watch, listen and learn, where I'm explaining everything from money management through to which markets to trade, how to trade them, how to identify. We go from the right hand side of the screen, exactly explaining exactly what we're looking for. Did I mention the psychology of trading? I think I did. All of that's included in the $197, and then after that, should you wish to continue, for $97 a month, it's a separate subscription. You drop me an email, hey, this is that good, I want to stick around. And so you generally find there's around 200 traders in these sessions. End of advertisement. Let's get into this, and I will turn this hair back on. It's quite a hot day where I'm located. So a game changer for 98% of a population. $1,000 a day trading part-time, $5,000 a week. How do we do that? I'm not going to give you any starry-eyed figures of earning $500 to $1,000 a day per contract. Can you do that? Absolutely. Is it probable for most traders? Absolutely not. On the other hand, earning $100 to $300 a day is extremely realistic for an experienced trader trading these patterns, and you'll see the patterns in a moment. Geometric patterns that appear in the market day in, day out. Now with the 6J, or with the currency futures, what's a sensible daily target? $100 to $200 a day, depending on the market. And what I mean by depending on the market, you go and look at the 6A, which is the Australian market, and in fact let me show you this. This is called the Market Analyzer. And what this does, traders, so I track all of the markets here I'm interested in. So if we look at the 6J, at the time of recording there's been 27,000 contracts change hands. On the 6A, the Aussie dollar, there's been 16,000. On the 6B, the British pound, there's only 8,000 contracts, and on the 6E, and all of that will change in the next hour because we're heading towards the London Open, there's only been 11,000 contracts. Now you compare that, say, to the ES, has been 30,000. So this is the after hours market, also known as the Globex market. Now if you want to trade 100 contracts, yes, you just can't beat the New York hours. Okay, you've got massive volume. However, if you're going to be trading maybe look realistically up to 20-30 contracts, especially on the yen, on the ES, of course, you're not going to have any problems at all. And this is where I'm excited, because I've been doing a lot of trading on the RTY, on the Russell. And with the Russell, and if we look at this here, actually I've got a slide on it, and this is important that you know this. So down here, this, and I know this is very hard to see, this is the ES, this is the yen, this is the RTY, the NQ, and the 6A. Now this is at 10 p.m. Central Standard Time. Now you may say, well look, I'm going to trade during the New York hours. Fantastic, you don't have this issue. However, if you're still working a job, or if you want a market that you can trade that's just a bit slower, now's the time to be trading from 8 p.m. onwards. Now realistically, you can start trading many markets from 6 p.m. However, you don't have the volume. Now this is what I want to show you. See over here on the ES, 16 contracts, 37, 50, 46, great volume. over here at 10 p.m. Central Standard Time, 11 p.m. Eastern, you got 36, 40, 50 contracts. Then we've got the RTY 1, 2, 5, 10. Okay, so you just don't have the volume. Now we go over to the NQ. Look at this, 1, 2, 5 contracts, and you can even see there's a spread, the difference between what someone's willing to pay. Okay, so you'll get what we call slippage. Then over here we've got the 6A. Okay, so we've got plenty of volume. Here's what the problem is: you want to be trading the market that gives you the biggest reliable waves. Okay, you want the waves in the market. Like as we're live right now, let me pull this chart down and just show you this right now. So this is live now. Each one of these steps, now we're looking at the Renko candles here. Now you can use time-based charts, tick charts, whatever rocks your boat. Okay, range charts, it really doesn't matter. I've been trading range now for years and I love them, but I'll sometimes look over at my tick charts as well. Okay, because what range will do, sorry, what Renko will do, they smooth out price action, but sometimes we can miss out on some information. But overall they give you everything you need. Now each one of these steps, see this here, these are what we call 2-tick Renkos. So from the low to the high of the candle, ignoring any tails, okay, just taking the bodies, that's 2 ticks, which is what's that, $13.50, $12.50, my apologies, $12.50. So each step there is half of that. Okay, so as we step down, and I wasn't going to show you this chart, this is called an overlay chart, by the way, but each step down is $6.25. What you're after is between 16 and 25 of those a day, and you, as you're about to see, can become fabulously wealthy on that, and I'll show you that, how you do that. So what we need is between 16 and 25 a day. Now you may say, why 16 to 25? Well, that's between basically $100 and $150 per contract per day. And so I'll show you that more as we get to, but what I want to show you here, sorry, is the trends. Now something else, I'm going to be showing you a slide in a moment of 5 things that I'm looking for each day. I want to know where my pivots are, where my major EMAs are, any intraday swings, any major intraday swings, and the current day's high and low. For an example, there's yesterday's low, and here's the current day's low. Now the great thing about these is that virtually every trading platform has these where they plot automatically. Now we are going to run out of time in explaining these in detail, but once you understand them, they're very, very easy to trade. Okay, now you look at this here, and so the market opened way back here. Now see the white, my white super scalper, that gives me my entries, and I want to be following what I call the cloud, but I want to be doing something else as well. I want to be looking at what my higher time frames are doing. If you use an overlay chart, you can put that there. I'll show you the standard chart that I use most of the time. But note up here, this is called a pivot bounce, and now I've got divergence. This here, I want you to whiz here. What have we got just here? See this here, traders? This is called a pivot bounce. Okay, and if you look at your higher time frame, that is just a no-brainer trade to take. But let's get past that for a moment. We're jumping ahead a little bit. So first thing, in as far as a market to go, seriously, the yen is hands down better than the Russell, than the Aussie dollar and the NQ. Now all of those the RTY, the Russell, the NQ, and the Australian dollar are all $5 a tick. Yes, it's $6 a tick, not much of a difference. Now, one disadvantage that we have with this market is the micros, where on the Russell, on the NQ, we've got the micro contracts, okay, which is 10% of the value, so you can start there. Now I'm about to show you how much money you need to trade this market I should say, the right way. But you might have to start perhaps on the Russell and build your account, because as you're about to see, doing it correctly, you need around $3,000. You cut corners in this business and you're never going to make it. That is, if you're undercapitalized. This is a business, and unfortunately so many traders, they watch a YouTube video, some guru shows them how to trade a market, and they're not giving them the truth as far as what's really involved or the capital requirements. If you go into this undercapitalized, you're going to blow your account, okay? And what it does is more than just blow your account. Yes, you can top it up a number of times, but psychologically it really is damaging. It truly is. You start to hesitate in executing trades where time really is of the essence. Now I've already mentioned one great thing about this market. It fires up sort of from 7 p.m. Eastern Standard Time, but at 8 p.m. you've got the Tokyo Open, and that's where you see a lot more volume in this market. At 6:37 p.m. it's tradable. Your first 30 minutes, there's plenty of buyers and sellers there, but there's just not a whole lot. They're waiting for the activity to kick in from around 7 p.m. Now let's get some clarity around how much money do we really need to trade this market correctly, and what's a realistic goal and target to go for. You see, clarity, traders, it allows you to hone in. It gives you it gives you focus. And so let's look at some realistic, and I'm just jumping ahead a couple of slides here. So first of all, we want to stay within what I call the 2% rule. We never ever risk more than 2% of our capital in any one trade. Now what that means is this: when we're trading the 6E, or which is the euro dollar, the pound, or the yen, okay, realistically we need an account of around $3,125. And the reason for that is what I'm about to show you. You may have a stop loss of up to 10 ticks, okay, so $62.50. So what that means is you need to have an account where you're not trading any more than 2%. Now you can get away, an experienced trader could get away with $2,500 to trade what I'm about to show you. However, your stop out rate will be a little bit higher as well. For your best trading opportunities, you want to have up to a 10 tick stop, and you'll see that. I'm just watching the clock here. Now if on the other hand you're going, not on the other hand, but here, if you're going for your 25 ticks a day, that's it, 25 ticks a day, that's actually just slightly under, or that's slightly over 157. You've got the potential of earning $12,000 a week within 14 weeks. Now the great thing about it is here that you're only trading 17 contracts, and you truly can trade 17 contracts, where on the Russell, on 8 contracts I'm getting slippage all the time, okay, sometimes 2 ticks, even up to 3 ticks, which is an issue for me. And so here you've got no problems, and in the 4 trades, the 4 winners I'm going to be showing you, I had no, I think I had 0 slippage, which was wonderful. So by week 14, now how this table works, and you can download this so you can play around with the figures, and there's a little training video, is that you only start trading a second contract each time you double your money. So you start off with your 3125. Once you double that, you go to 2 contracts, then you go to 3. You're using the market's money. And so we can see here by week 14, okay, so week 14, whoops, by week 14 down here, we're earning, well in this case, 12,000 a week, 58,000 in our account. Now the next question is then how do I actually do it? All looks good so far, Ray. All right, yep, get home from work, I'll roll up my sleeves, turn the television off. By the way, I'm still amazed at how many people will say to me, how many dreamers will say, well, look, I get home from work and I just want to chill. I want to, grab a beer and turn the TV on. Well, what would it mean to your life if you could be earning $1,000 plus in 2 or 3 hours each evening? Would you change your lifestyle? What would it mean to you and your family? It would be life-changing. You can quit your job. You can then potentially long-term then even change the hours that you're trading. So this is not going to be for everyone. Okay, now yes, what I'm about to show you also, you can trade any market using exactly the same setups. Most of you know I trade oil. I trade the ES. In fact, here are the markets that I do or can trade. There's a whole range of them. Okay, so there's just a ton of opportunities. But for trading after hours, for learning and mastering the art of day trade, it's perfect. It really is. Now, in today's session, I'm going to show you 4 out of 4 trades that I had, and I'm just going to quickly change that, just checking that what's happening live on the market. So I had 4 out of 4 in 60 minutes, so it's a bit longer than what I'd normally be trading for. Now, it wasn't perfect trading, and I'm going to show you these here. We'll go to the charts, and the reason being, there are rules, and you'll hear me talk about in a moment, pivots. And I had yesterday's open down here. Let me start with this one over here. First of all, for members watching, we had basically a T10 right up there, and then I had a T12. Now I give my setups codes because it's a lot easier in my live trading room when I just say we've got a T10, we've got a 2B or whatever. So I took this trade then up to the high here, thank you very much. I then shorted here, thank you very much, and then I added to my position. When I'll add to a position if I'm in the green, that is if I'm making money. So I entered the trade up here, then came down. It was an exact 50% retracement. It rallied up and then we bounced. Let me explain it. I forgot. I've got a video. I recorded it. Let's go to the video. My goodness, my apologies. So what we'll do, let me explain it here as we go along. It's only 6 minutes. Okay, it's only 6 minutes. So first of all, I'd already jumped in. So for members watching this, we had I was a bit late on the T10, but I jumped in on the second entry just here. So we had 2 entries, and I was buying up to the major EMAs. Now cross the 200. When you cross under a 200 EMA, what you'll generally find is you've got a greater opportunity for a new trend. So you're more likely to have some really reliable trend following setups. So here, except for the T10, which is a reversal confirmation, I was only trading with the trend itself. This is a no-brainer. And here, by the way, we call this is what we call, for the experienced traders, a little 2-legged pullback. So I'd already taken this trade, thank you very much. Now what I was about to say is that I'll only add to a position if I'm already in the green. Now I only trade at a maximum of 1% risk per position I've got open. As you build your account, traders, you want to drop from 2% down to 1%. Yes, it means a lower rate of return, but it's still enormous long term. So you want to lower your risk. I'm in my 60s, so I just don't want the stress. So you lower your risk, and it just makes it easier for trading. Now initially when you start, maybe 2%, maximum of 2%, but build your account, you drop your risk level. So here, and what I mean by that is if you're already 2% exposed, even if you're in the green, I recommend you don't add to a position, okay, because then you'd have 4% exposure, and God forbid something terrible happens and you get stopped out and you wipe out 4% plus of your account. We're really about risk management. We've got to be managing our risk at all hours. So we get a pullback, nice trade. I've then got and I call this a 3B, by the way. That's a 3B, and let's go along, and I'll just keep this rolling now, and I'll just explain everything that I was doing here. So first of all, I decided as I'm trading here to start recording. So I'm in my second position, and I'm up 275 on this particular trade here. Okay, and I'm just looking around thinking, what am I going to do here? As you can see here, it's not terribly fast. It's just, so this is the real speed, by the way. I was just measuring the sort of pullback we've got right here. I don't use Fibonacci levels in my trading really actively, but I'll quite often refer to them. Sometimes they can help identify a potential reversal. But what I want you to notice here is we just crossed under, this is my one up here, okay, we just crossed under the 200, and what that means is you're much less likely to have a reversal. So just there I had another T10 set up just there. Okay, so I'm looking at this here. I'd entered the trade based upon the T10, and if I didn't get in there, I've now got another entry. Now down below, remember a few minutes ago I was talking to you about pivots. See up here how we bounced off that. Found a bit of support here, bit of support here. Now this is a Camarilla pivot. This is yesterday's close, yesterday's open. They're not officially pivots, that is the open, high, low, and closed, but they act like pivots. They're price magnets because we as professionals, we buy and sell into these levels, and they become what we call a self-fulfilling prophecy. And if anything, they're what I call predictive indicators. Back on it here, if I was not in that one, I've got a trade entry right here. That's what we call a 2B. Now down here, I'm actually what I call front running this pivot, yesterday's open. And front running means I'm actually going to get out before I hit that level. And the reason being, we'll quite often bounce off those levels, and sometimes, and I'd actually pause the video there. Okay, so the reason that jumped, I'd pause the video. It's quite slow, and as I said, these 4 trades took an hour. So we're just sitting back, and you can see there, just here, I'm just referring to the higher time frame, the anchor chart. Okay, so we have an entry chart, have an anchor chart. Now we can see we easily punch through the pivot, so I could have actually picked up a larger move. However, get in, get out, get paid. So I'm looking at my higher time frame now. I actually have that, so I've got 6 screens, so I actually have that already displayed normally on other screens here, but I just wanted to show. I must have been, I know what I was saying. I think I was probably saying if we've got a pullback, so say here if we get a retracement, a pullback, and you've got green candles on your higher time frame, ideally you want to see red candles. Now just here, confirming the trade. Now just here I've re-entered here. This is another, so just there, this is another 2B. Now I'm looking at this and looking down at the pivot down below. Now there's actually a setup called a descending. You've got ascending and descending triangles. Okay, so here we're making lower highs, we're not making any lower lows. Usually that means we'll eventually break to the long side. I'm just keeping an eye on the markets here. So I've taken this short just here, and I'm thinking here about this level. Do I not? And we'll see if I scroll down in a moment. Now I'm always hesitant at pivots like here. That's what I'm looking at. Okay, so I'm just looking down here, so potentially we'll get down to that level. Now this is tough because I've got yesterday's open, and I was already had 3 out of 3 here, and I only needed to make up another 150 or so, and I've hit my 157, 158 per contract. And the reason that's important for me is I want a 5% return on the capital I'm engaging. Well, actually 2.5% in my case, but for you, for most traders, 5%. Let me show you that, what I mean by that. First of all, and then we'll go back, and this is important. So, and this is the sad part about it, is so many traders are saying, show me the trades, show me the trades. But yet money management, having a target, knowing where to get in, get out, and manage your back end, manage the books here, is important. So just here, if you want to go for 125 a day, which is 20 ticks, okay, on average I need 4 trades a day to achieve that. 4 net trades after commissions, okay, and on my 3-1 account I need 20 ticks a day. On the other hand, we come back to here, okay, if you're after your 5% return per day, that is $157. That's 25 ticks, and 25 of those little steps as you go down. But look at the massive compound effect, and what it means is if you're going for 6 to 7 steps, you need between 4 and 5 trades a day, and you just romp those opportunities in every day with the yen and with most good markets. Of course, different markets, like the ES for an example. The ES is a totally different market to this. It's $12.50 a tick. It's a lumbering giant, but still offers some great bounces. And if you look at one of my videos from last week, I had a great trading day on the ES, but it's different. Okay, you don't get the massive waves most of the time you'll get on this market, but the point is here, 5% return there is 157. 2.5% return on capital engaged is 157. So you'd start off typically with that, and you can see where your potential is. Now I only trade 8 lots at a time, so you'll actually see usually me only trading 8 lots on this market, but I will add another 8. So my income targets are probably going to be totally different to what yours are. Once again, I don't need to be earning my 20-30 grand a week. So I've got a great lifestyle, day trading 1 to 2 hours a day, as most of you'll see on my videos. Now this is a great target. However, what you might do is start off conservatively. Where are we? Just here, $100 a day. That's only 16 ticks. You start off on 16, which is basically 3 trades a day net after any losses. Yes, if your goal is to get or be earning 10,000 a week, it's going to take you 6 months to get there. Time will pass anyway. 5,000 a week, it's going to take you 19 weeks to get there. This is the true potential of this market. Now over here, what actually happened was I was thinking, okay, I should just scalp out at the pivot just here, and I didn't, and I got greedy because I could see down below there was a pivot, so I thought I would stay with it. So if we continue with this, and I typed in, I should have known better, and that is I just should have taken what I needed to hit my target for day at yesterday's open at that pivot level. And it comes up, and so we're live here, live recording, and what I'm saying here, I should have covered at the pivot. That is, I should have exited the trade at the pivot. It came up right to the tick. Now let me just explain something to you on my stops. Remember before I said to you that you can get away with a $2,500 account or the 3-1, and the difference is this: the stop size. If I'm waiting for, I'd need to show you this, but if I'm waiting for what I call my anchor chart 1 candle to close or to confirm a trade, I might have up to a 10 tick stop loss, where I can get away if I only use my super scalper with an 8 tick stop loss. So it means that overall you can trade a smaller account, but there's nothing like putting your stop one tick above the swing, one tick above, one tick above. So at times you wouldn't have had it over here, but at times you're going to have a stop of up to 10 ticks. Without going through it and showing you and explaining it, spending a lot of time, perhaps you may not be getting the concept, but just here you can see here price actions coming right up to test my stop. Now this is a mistake traders are making every day. They move their stops hoping the market will reverse. What you'll notice here is I stay with it and I'm expecting to get stopped out here, and that's why I'm typing this in. I should have known better. That is, I should have taken my profit. You see, I can always get back in, get out, get paid, because I know when I sell into a pivot there's a very good chance I may get a reversal. And we can see here we're sort of bouncing around in a bit of a trading range now. So I'm thinking here, so what happened then? It slowed right down, and you can see I stayed in it, and then it just went bang. Okay, it just popped, and I think I'll probably well, here I'm saying that was close, and you can see I was right within one tick. So I'd like to have my stop one tick above, one tick below, one tick below, one tick above. Now if I enter this trade, I'm going to have a smaller stop loss, so I will tuck it in just below. So overall it was a great trading session, 1 hour. But this is where also we've got to sit back and we've got to examine our trading each and every day. And what I mean by that, traders, I'll just see what I can't remember what I place here, is that what can we learn from? Yes, we did finally punch through. Now we were actually we're coming down, and just after this there were some great trades anyway. That was close, but I know better than hang around and hope I'd push through. Now let me just show you this here. Let me just quickly do this. Let's quickly go to the charts here, and just there, and just show you what happened straight after. We came down, we had fantastic divergence, and then there were some fantastic trading opportunities straight after anyway. Okay, so it's just pivot with myself, and so my members that are watching this, you know how I feel about pivots. I'm very cautious because when we sell up those levels, quite often we will bounce. Now I've gone a couple of minutes longer, but just one other thing I want to show you here, which we sort of jumped ahead here, is here are the 5 things that you've got to really be looking at, and they're easy because they plot automatically on your charts. Floor pivots, typo, floor pivots and Camarilla pivot levels plot automatically. They're predictive indicators. All right, prior open, high, low and close, our major EMAs, you can just see how we bounce off those, intraday swings, and the current day's open, high, low and close. Now sorry, not the close, because the open, high and low. So you do look at yesterday's close. So they all plot automatically. They're easy to learn, and we buy and sell into those levels. Now I just want to show you just one more thing, and I know we're 38 minutes into this here, but if we then go to here, all right, so we look at this just here. For members watching, you can see there we've got a plain vanilla T10 just there. Okay, plain vanilla T10, and I want to point this out. How do we know when the market has reversed? When should we stop taking these? What I want to do is point out 3 things on my anchor chart. This little indicator here, and this one just here, and let me just do this. Okay, so you've got this point just there. Now for this entry, we're just looking at a little pattern that appears on our entry chart. But what about this one? I want you to look over at my anchor chart, which is a higher time frame. Normally traders, I'd have it expanded like that. Okay, so here we've got a little indicator here that you can get for almost every trading platform, and that's telling me yes, I want to go long. I've got another one just here, see how it's blue, go long, and here my midline, go long. Okay, go long. Now you only need to have actually one of those as confirmation here. Now from your entry, 1 2 3 4 5 6, remember before I spoke about 6-step moves? Okay, so I mentioned 6-step moves. So there it is there. I call those steps, and here for 25 ticks a day, which is okay, $175. Sorry, I had a mind blank there. You can see there I only need 5 of those a day. 5 of those a day. Now one more thing before we sign off. See this black line just here, this resistance level? We call these T12s. Having 1 or 2 reasons for taking a trade is fantastic, but when you have 3 or 4 is great. So I've got a pivot bounce, I've got major divergence, we call that divergence on the higher time frame, okay, and I've got a T12, a loaded trade. Anyway, I've gone far much longer than what I wanted to go here. So traders, become a member, come and join me and let me teach you how to trade these. As I mentioned, look, it just trends beautifully. Now we could also go and look at lots of other markets. For an example, we can, now on this one we've got the ES. Now if we look at this now, this is the difference, by the way, and this is where you really want to which market's going to give me the best bang for the buck. Now if you want to be trading 100 200 300 contracts, yes, this is a market to go for, the ES. However, note how choppy we can get. Now there's been some fantastic opportunities today, and I know it is after hours. Okay, we're in the Globex session, and by the way, we're only 30 minutes away from the London Open, but there's a massive difference between, see all this chop? Okay, so there's a huge difference. But then we've got oil as well, which we can which we trade. Now oil has got fantastic benefits. Okay, it can trend really well. However, early in the Globex session it can be, it's very thinly traded, but from now on in, that is into the London Open, then leading into New York, we get some great trading opportunities. But what I wanted to show you was right here is the Russell. Now the Russell is $5 a tick. Let me just correct this chart here, is $5 a tick. But see the difference here between what we were just looking at. Yes, you'll get some nice waves. We go back here, okay, and remember time of day is important. So this is the open of a Globex session way back here. So there's been some beautiful wave opportunities. However, it's thinly traded. You can still trade 5 8 10 contracts, but you just got to be prepared for some slippage. Anyway, 45 minutes into this is a record really. Come and join me. See you in my coaching room. Thanks traders. Cheers.